Good morning, everybody. Welcome to our Thursday Q&A session. Thanks for joining us this morning. We've got Ross van Coller, who's going to be speaking to us about Aspen Pharmacare. And then Sean is not in. He's on a bit of well-deserved leave. I'll run the technical bit, and then we'll open the floor for questions. Please type your questions in the chat as we go along. Otherwise, you can just switch on your mic and your camera and ask it outright if you're welcome to. It's nice to have you. Ross, thank you for sharing your insights with us. Over to you.
Great, thanks for the introduction, Sarel. Guys, for those who don't know me, my name is Ross van Coller. I cover healthcare and consumer staples, as Sarel mentioned earlier. And today we'll be discussing Aspen Pharmacare, South Africa's largest healthcare play. So just to give you a big picture look at what's happening in the healthcare globally, it has really struggled in the past year. Very few companies are even keeping up with the MSCI World. Eli Lilly being the only exception. Even Novo Nordisk has fallen off a little bit, riding the weight loss and obesity drug craze that's going on at the moment. And a lot of these guys are reaching the end of patent expirations. It's the biggest patent expiration period ever, coming towards the end of this decade. So a lot of the guys having to negotiate that. And you can imagine the healthcare industry is very, very highly regulated. As far as Aspen goes.
Sure. So you had a good trip then. That's very good. Huh.
As far as Aspen goes, they get hampered by single exit pricing in South Africa, which is basically government regulation, which limits the amount you can increase on certain drugs. In China, they've got something similar, where it's volume-based procurement. So basically, they incentivize large volume by way of a tender, but you have to deal with cheaper prices. And then Australia has something similar. So those are big geographical areas that Aspen has to negotiate. So it always impacts them from year to year basis. So we do have an upside on this of about 20%. Not much has changed as far as our valuation has gone. Aspen just has traded from about 230 Rand, and now close to 170 Rand. So we used to have a hold recommendation on this, and now it's a buy, just because the share price has come down quite a bit. It's looking cheap. I'll show you a little bit later, but based on a forward PE of 9, it screens relatively well below its 5-year average. So from that point of view, a 20% upside on Aspen is quite good, and maybe even a little bit conservative. As far as revenue goes and their results, they released their results in September. That was for June 2024. They saw an increase in about 10%, but a lot of that came from currency movements. The EPS came down by about 15%, largely on the back of the heparin inventory unwind. And the margins obviously took strain there. For those that don't know, the heparin, basically they built up a stack of heparin, supply exceeded demand, and they had to offload that at discount prices. So the EBITDA margins came down to about 25% from 27%. If you look at a long-term average of about 30%, that obviously is going to impact their valuation. We do have a buy, and things to watch, and this has been a story for about 18 months now, is their sterile capacity. They've got these manufacturing plants that are sitting not to capacity, so if they can fill those with contracts, as management said they are going to, if they can execute on that, then we'll probably see a share price move up and probably a higher intrinsic value. As far as revenue goes, Aspen can be a little bit of a frustrating one in the sense that they keep chopping and changing how they segmentalize their revenue. But essentially now they have commercial pharmaceuticals and their manufacturing. Commercial pharma is broken down into prescription, over-the-counter, and injectables, and then manufacturing is on its own with 3 subdivisions, which I won't get into. But essentially, manufacturing contributes about 1/3 of their revenue, but only about 6% of their gross profits. So that's more or less where they're having the issues. Their margins are very squeezed there, and that's mainly due to the heparin. And then as far as the geography goes, they've sort of shifted from, it hasn't changed dramatically, but the Americas has become their second biggest geography. And that's mainly on the back of the acquisition of Viatris's portfolio of products. So South America is actually contributing the second largest revenue outside of the Africa region for Aspen. I won't spend too long here, but this is essentially how it's broken down now: is commercial pharmaceuticals and manufacturing. You can see commercial pharma has done very, very well, steady margins at about 60, this gross margins at about 60%. And manufacturing has been fluctuating as they've dealt with the sterile capacity and the heparin inventory unwind and that sort of thing. So if the manufacturing gross margins can sort of make their way up to 11, 12%, we should see more of a contribution from the manufacturing, considering it contributes a third of their revenue. And management has guided for that, but whether or not that's going to reach it in the fruition in the next 1 or 2 years, they have said timing is uncertain, so we'll have to wait and see with regards to that. The debt used to be an issue for Aspen. It's not so much an issue anymore, but if you cast back to 2017, 2018, they went and they bought a whole bunch of businesses which elevated their debt to concerning levels. Their net debt to EBITDA was close to 4.5 times. Which should raise a couple of flags, but they've done a very good job at dropping that down recently. It's seen a recent uptick. That's because they've gone back to acquisitions now because they have the capacity to do so, and they said they will probably do so going forward with some bolt-on acquisitions. Interpret that as you would like, but it's still at very reasonable levels of about 2.2 net debt to EBITDA, and they want to drop that to below 2. They're generating sufficient cash flow, so it shouldn't be an issue. So debt isn't of major concern, but it used to be quite a big talking point with Aspen, so I thought I'd just touch on it. I've included this. It's a little bit old now, but it was basically about a year ago, the guidance of management with regards to the sterile capacity. So they're talking about all these contracts they're filling. Initially, it was 8 billion by the end of 26, 27. And they haven't really elaborated a bit more on that since then. So they have got contracts lined up for about 4 billion of that, but essentially they've got a manufacturing plant in France and in South Africa with some spare capacity. These lines should be open this year, towards the end of the year. And they're also saying that Mounjaro will come online at the end of 2024. So that should be any month right now. Mounjaro is Eli Lilly's weight loss drug that I'm sure everyone's read about. The only issue with these things is it isn't a matter of plug and play. You can't just get a contract and put it straight into your factory. There's a tech transfer that takes anywhere from half a year to 2.5 years. So it'll probably take a little bit of time between them getting the contracts and fulfilling that capacity. But from a guidance point of view, it just makes things a little bit easier. Aspen doesn't really have any local competitors. The closest competitor would probably be Adcock. Adcock has 1 or 2 divisions that sort of overlap with Aspen, but essentially they've got their own stuff. So if you look to the international competitors or peers, those naturally trade at a far lower PE, and Aspen sort of hovers around the 10.5 1-year forward PE. So at about 9 times, it's looking quite attractive. And even on an EV to EBITDA multiple, which I can touch on now, it's looking quite low. Some of my assumptions are quite conservative. Most of it focuses around them just getting their EBITDA margins back up to around the 30% mark. I think it might take a year or 2, but in the next year, we should see 27, 28. And then they'll obviously pay off a lot of debt. Shares will remain stable, but I think even in our base case, we have about a 20%. So I do weight it a little bit more to the bear case, just because Aspen has a history of just chopping and changing their guidance, and management being a little bit optimistic with what they expect to happen or what actually happens. But even with those assumptions in play, we still see a nice 20% upside, and the bull case is not completely off the table either. I think it's all achievable. We're just going to have to wait and see with these guys. That brings me to the end of my presentation. I'm going to turn over to Sorrel now to jump you through the technicals. Sorrel, I've got two charts, so you just let me know which one you want.
Yeah, perfect. I think, Ross, jump back to the first one for me. I just want to show the guys where I got that trend line. That trend line I took back from 2020, and that thing has hit a couple of times on the trend line, which makes it a strong trend line from a technical perspective. And if you jump forward to the next one, you'll see that the current levels of the stock is hitting that trend line almost. So after the results came out in September and we had that big drop, the stock's been trading slightly downward, and those bars, in my opinion, are getting smaller and smaller and smaller. So it's getting a bit compressed. So which indicates that the price action is getting a bit tight and there's a bit of uncertainty in the market. And I think this trend line might hold. And seeing that we're talking a proper multinational with resilient fundamentals like you've highlighted, and also looking at your bear case, we're already below your bear case. I think your stock's trading just below 170 this morning. I think there's a real chance of this trend line holding. If you're a pure technical analyst, then you would know that about 80% of all breakouts fail. So if it does break through this trend line, it should be short-lived and then probably lift its head from there. That's my take on the technicals. Not much else to say except that, yeah, it's bearish. It's below, like Sean says, below the 20-day, the 50-day, the 200-day moving average. The intrinsic value is seemingly way up there at around $206. But this bottom trend line for me is the one to keep an eye on. And might keep the stock steady for a while and maybe track along this trend line before start finding its feet to go slightly higher. So I, from a technical point of view, I totally agree with what Ross has said. All right, we're going to go check the chat quickly and see if there are questions. And if you have a question you want to ask outright, you're more than welcome to. Richard says, do they pay a dividend? Which is very important for shareholders, Ross.
They do pay a dividend. It's not very impressive. It's about 2%. They've got about a 2% dividend yield. Compared to the other healthcare guys, it's below. So the two hospital stocks, Life Healthcare and Netcare, pay closer to 3-4%. And Adcock pays more than that as well. So if you're looking for dividends, I don't think this is the best stock to take.
Thank you, Ross. Richard, hope that answers. There's nothing. I don't see any anything else in the chat. If you've got a question, guys, now's the time to ask. Maybe just raise your hand or just switch on your mic and ask it outright. I don't see anything, so I'm going to close the meeting. Guys, thank you for joining us this Thursday. To summarize quickly, Ross has got a set of solid fundamentals there, thinking that we're almost at his bear case. The stock's undervalued, has taken a hit along with all the other pharmaceutical stocks out there, has been having a tough time. But on the technical front, it certainly looks like it... Dennis says, when do you see it turning? On the technical front, I'm saying watch that upward trend line, and that trend line's around the 170 level. And it may start using that trend line as a support and slowly working its way up, Dennis. I expect that trend line, which comes 5 years back, to hold. So not exactly sure when it'll be turning, but I mean, it's definitely cheap at the moment, considering Ross's bear case and the support line that I've drawn in there. All right, so yeah, that summarizes it. Possible stock to consider for inclusion in your portfolio. Buy recommendation by Ross and them, and then the technical supports that as well. Next week we're going to be speaking to Munib about MTN. Thank you for sharing your insights with us today, Ross, and we'll see you guys next Thursday, same place, same time. Thank you very much for joining. Goodbye.
Thanks, Arl. Thanks, guys.
Thanks.